Part 1B. Prepare the consolidated statement of cash flows of the Bisney Enterprises Limited Group for the year ended 31 December 2018 using the direct method. 42 marks and 2 marks in terms of communication skills, presentation and layout. Not free, guys, but easy. Right, now I have provided you with some exam technique steps in your solution. Let's just briefly work through this. When you receive a cash flow statement, my first step is I will include a basic timeline and my group structure to ensure that I understand the cash flow implications. Remember, you will obtain all of this during your reading time. We have Bisney Enterprises that owns Lion King Limited. Remember, 100% wholly owned during the year. Therefore, from a cash flow point of view, we will have to add the subsidiary. Remember, we reconcile our T accounts to be able to calculate the cash flow implication. And this is a subsidiary from 1 May 2018. Then we know that Bisney Enterprises has an investment in Simba, and Simba is an associate, therefore equity method accounting. Bisney Enterprises has an investment in Timon. When we look at Timon, remember, Timon is a subsidiary, and then during the year they've lost control. Therefore, we will have to take out our subsidiary and recognize this as a financial asset at fair value through OCI. Then there is NALA. In terms of NALA, remember, there is change in ownership. This is a subsidiary that remains to be a subsidiary. And within the subsidiary, they have sold 20%. It was 85%, and this is now 65%. Yes, they have sold 20%. Therefore, we have to apply our principles of IFRS 1096. And then there is Rafiki. Remember, Rafiki relates to part C, where we need to discuss if there is control, but this is in the current year, 20.19. Therefore, ignore this for now. And our timeline, 1 January 20.18 up until 31 December 20.18. Right. Therefore, when we refer to our exam technique steps, we have included our basic timeline and group structure. Step number 2, draw out the format for the face of the cash flow statement. Right, guys, you need to include this on a new page. Remember, each requirement section, start this on a new page. Part 1B, cash flow statement. Your cash flow statement template, remember, consists out of your operating activities, your investing activities, and your financing activities, right? Leave sufficient lines open. Now, my recommendation, and this is the way that I remember this, is when I know that I need to include my cash flow statement, I will include always my cash receipt from customers will be my calculation number 1. My cash paid to suppliers will always be my calculation number 2. And on a new page, I will start off with my calculation 1, cash receipts, and calculation 2, my cash paid. In terms of your cash flow statement, remember, you need to disclose separately on the face of your cash flow statement 3 things. Number 1, your dividend income or expense. Number 2, your interest income or expense. And number 3, your income taxes paid. Remember, this is a requirement. In terms of this question, they've indicated to us that dividends and interest will be included in our operating activities. Then, extremely important, guys, and if this is not included on your revision pages, please add this. When you refer to IS 7 paragraph 39, it indicates to us when there is a scenario in terms of our subsidiary where we either lose control, where control is lost, or when we obtain control. we need to include this in our investing activities on the face of our cash flow statement. Now, this is a rule in terms of IAS 7, paragraph 39. In terms of change in ownership, partial disposal of subsidiaries or partial acquisitions, when you refer to IAS 7, paragraph 42A, it indicates to us when there's partial acquisition, changes in ownership, which is in terms of IFRS 10 paragraph 23, remember, this should be included in our financing activities, right? If this is not included on your revision page, please add this. In terms of my exam technique, step number 2. Right, guys, I'm not sure why it actually does this though, hey? Sorry about it. Okay, number 2, draw out your format. Right, we have done this. Remember, in terms of the format, leave sufficient lines open for smaller calculations. Number 3, perform a calculation for each relevant balance in the trial balance, or in this question, statement of financial position, profit and loss, and OCI, including cash paid to suppliers and employees and cash receipts. Remember, I have indicated that my cash receipts will always be my calculation 1, cash paid will be my calculation 2. Now, I've indicated here that I prefer T accounts where possible and add my opening and closing balances. Therefore, guys, this, my step number 3, I have already included T accounts, and we now need to include opening, closing, and so forth. Step number 4, you now need to go through the information in detail and pull out the information that you need by adding this to your calculations. And very important, as and when you have completed a calculation and you have identified the cash flow effect, please transfer this to your cash flow statement. Very, very important. Please try to not waste time. Then step number 5. Now, guys, bear with me. I'm going to read through this briefly. Total all the balances and transfer them to the face of your cash flow statement. Remember, if you're not going to transfer your calculations, they're not going to mark your calculations. The requirement states that you need to prepare the cash flow statement. Now, I have indicated here, should you be running out of time, you don't have to use your calculator to calculate the balances, the total. Look at the figures, include a reasonable amount balance. Now, guys, you can write this down. It might be that they will deduct half a mark if you do this, yes, but you have 2 options. If you are running out of time, I will rather lose half a mark than lose a lot of marks, because they're not going to mark your calculations if you do not transfer this. Right. Therefore, guys, I know this is a difficult one, but if you are running out of time, just add totals and transfer. Add totals, transfer, add totals, transfer. Right. 6, total your actual cash flow statement. And then a few important things that you need to remember. Please do not wait until the end to transfer your calculations. Do this as and when you identify that there is possibility of cash flow being involved. Right. And then ensure that you reconcile all of your statement of financial position accounts. This will help you to ensure that you identify if your cash flow statement is complete. And then, very important one, the last bullet point, you need to know your acquisitions, disposals of subsidiary notes. When you look at our scenario, our structure, remember we have an acquisition of Lion King, therefore they can easily include that you need to include your note. In terms of Timon, loss of control, they can easily include that you need to include your note in terms of IAS 7 and IFRS 12. Right. Now, when we look at this, guys, we have completed step number 1, 2. In terms of step number 3, I want us to now include our calculations per statement of financial position line item. Therefore, I'm first going to work through my statement of financial position. I'm going to include my opening balances and closing balances. Then I'm going to look at my profit and loss, identify the relevant information that I'm able to include in my T account calculations, and then only will I move on to step number 4.